Yeah.
Hey, what's up everybody? Welcome to Ala's World of Finance and welcome to Stock Market Daily. I hope you're all having a fantastic day. I hope you enjoyed your 4th of July. We've got so many things to talk about today. I don't even know where to start, but we're going to talk a little bit about Nintendo because they're down a little bit. We're going to talk about AMD because they're up a little bit. And we're also going to talk about Activision Blizzard. We'll talk a little bit about Tesla. We'll talk a little bit about some of the auto parts companies like O'Reilly and stuff. A lot of them are down massively. So we're going to talk about that as well. A lot of other stuff too. So we should just go ahead and get started because there's too much to talk about today. So when looking at the markets, tech stocks actually did very well today. And we're going to look at that in a second. But Prudential Financials is actually saying that investors are picking up tech stocks at a discount. Voya Investment Management said that we're taking 2 steps forward and 1 step back, and they said that they would take that all day long. And they cited strong expected corporate earnings in the technology sector. Okay, now there's also talk about the strength of the U.S. economy as the Fed tries to normalize the interest rate policy, and we know that inflation is below the Fed's 2% target despite growth in wages. So they'll be keeping an eye on Friday's labor market report. And anyway, let's just go ahead and take a look at the markets. So when looking at, and by the way, we're still in extended hours trading, but when looking at the markets, the Dow Jones is down 0.01%, NASDAQ closes up 0.67% up, and S&P 500 is up 0.15%. So the tech-heavy NASDAQ is kind of leading the three. Looking at some popular stocks here, Tesla is down almost 7%, and at one point they were down over 7%. And so we're going to talk about Tesla in a second. And Alibaba is up a little bit, Intel up a little bit, Ford is down a little bit. We talked about Ford recently, and so it looks like they kind of went up, and now they're kind of coming back down a little bit. And then Amazon is up today, which is good news for my girlfriend because I told her to buy Amazon stock. So, and then when looking at the gainers and losers here, AMD up over 8%. I mean, it's crazy. They're up almost 9%. So AMD is up a very good amount. It's, you know, we'll talk about AMD in a second. Yeah, we'll talk about AMD in a second. So anyway, some other stocks here. Let's see here. O'Reilly Automotive, they are down over 18%. I believe that's the biggest one-day drop for them since, I don't know what it might be like in history since they IPO'd. I mean, it's like a massive drop for them. So down over 18%, almost 19% they're down. And then a lot of auto parts companies are down as well. So we're going to talk about that in a second also. And then when looking at the sectors, so technology sector is leading the pack, up over 1% today. Healthcare is up as well. Financials is up as well. Now, energy is actually at the bottom. They're down a little over 2%. So energy down a lot, and we've seen like some negative sentiment going around right now with crude oil and oil prices and stuff like that, and how much confidence they have in oil and stuff like that. So that's, you know, energy is kind of, it's been a little volatile lately, a little bit, you know, maybe not as much as the tech sector, but it's definitely been a little volatile in my opinion. So anyway, let's go ahead and start by talking about AMD. So looking at AMD, it's up 8.56% for the day, and extended hours trading up another 0.08%. So very good performance for AMD today. And you might be asking, why is it up so much? Well, there's a few reasons in my opinion. So obviously, you know, the first thing that we have to look at is it's been dipping for a while. It's been going down, you know, the last few trading sessions. So at some point it had to come back up. So I was expecting it to come back up. So that's kind of, I think that's kind of part of it. You know, it's been dipping for a pretty long time. I'm sure a lot of investors wanted to pick up on the dip. But the other thing here is looking at some of these reports. So here's a report from MarketWatch. And they basically said shares of AMD surged Wednesday to snap their longest losing streak in 18 months as upbeat semiconductor industry data helped spark a broad rally in chip stocks. So when looking at this data here, so it's from the Semiconductor Industry Association, and they said late Monday that global chip sales in May jumped 22.6% from a year ago to $31.9 billion, the biggest year-over-year leap since September 2010. All major regional markets witnessed growth of more than 15%, with the Americas pacing the world with a 30.5% increase. Okay, so we saw a lot of semiconductor, a lot of chip stocks, a lot of them kind of going up based on this data. So a couple reasons here, you know, I think investors definitely wanted to pick up AMD on the dip. AMD has already had a lot of good news. I don't think it was justified for them to be dropping as much as they have. And so hopefully now they'll kind of start rallying back up. But, you know, AMD is so volatile, it could drop at any moment. The point is that I'm long-term on AMD, so I don't really mind too much of the volatility. I'm kind of just expecting it to do well towards the end of the year, going into next year, next couple of years as well. So anyway, that's AMD. Now let's move on here. So let's look at Nintendo, because I just want to talk about them for a second. So when looking at their stock, they haven't been doing too well. So today they're down another 3.86%. And I've gotten a couple comments asking, you know, why is Nintendo not doing so well lately? There really isn't a fundamental reason as to why Nintendo is doing bad, because Nintendo should actually still be doing very well. They've had very good announcements, and we're going to talk about them in a second. But Nintendo has been doing very well, so for their stock to be going down, it doesn't really make sense. Well, there's a couple of reasons why I think it's happening, and so I'm going to give my opinion on it. First off, you have to remember that the Nintendo stock was doing very well during the Nintendo Wii era. Then going into the Wii U, it started to really come down because the Wii U was a huge failure and it was a disappointment, and you know, so it didn't sell very well. So the Nintendo stock dropped accordingly. Well, then it started rallying back up, and now that we've had great news with the Nintendo Switch, it's been going up massively. So year to date, we're talking over 50% increase year to date. So it's been doing very well. Now, I think that a lot of investors wanted to cash in on those profits. Okay, so we're probably seeing that a lot of investors are cashing in on that Nintendo profit, and they may have not been long-term investors to begin with. They may have just been kind of short-term investors trying to cash in on the whole Nintendo Switch hype, and then maybe just wanted to jump ship right after that, which it makes sense, and it obviously worked. And so, you know, I don't have any problem with it, but they're not necessarily long-term investors. So you kind of want to get rid of those investors. You know, at some point you want to get rid of them and hold on to more of the longer-term investors. So I think that's kind of what's happening here. A lot of investors are cashing in their profits, but I don't see any reason to jump ship. I think that we will still continue to do very well. And you have to remember, one of the reasons why I think that Nintendo stock is going to do very well, actually the initial reason why I invested in Nintendo in the first place was because I believed the rumors that Pokemon was going to come to the Nintendo Switch. Now obviously those were rumors for a while, and we still saw a lot of profit even while those were still just rumors. So when it got confirmed that Pokemon was coming to the Nintendo Switch, that just made it all the better, and that just made it a long-term play for me. But Nintendo stock was still doing very well even without Pokemon on the Switch, and that wasn't really the reason why I was investing in it. So it kind of, like, what I'm trying to say is that all of this volatility doesn't really matter to me, because the fundamental reason why I invested in Nintendo in the first place hasn't even arrived yet, and we've still seen massive profits, right? We've still seen an increase year to date of over 50%, and Pokemon is still not even on the Switch. So the whole play that I'm trying to make hasn't even arrived yet, and that's going to come late next year. So even despite that, okay, so despite the fact that Pokemon hasn't even come to the Switch, we're still seeing really good announcements. So when looking at it here, the Switch is still doing amazing without Pokemon on it, and Nintendo did great at E3, and there was no competition from Sony or Microsoft announced, so there's practically no competition for Nintendo in the console quality handheld market, and Splatoon 2 is being sold out, and it just got released for like pre-orders, but it's already sold out. So you go to Amazon, it's already sold out. And we have Mario coming this holiday season, and the Switch didn't even launch in holiday season, and we'll probably have Pokemon by next holiday season. So in other words, you know, I'm not panicking. There's tons of really good things going on here, and I think that this was more of just a lot of investors trying to cash in on their profits. Now, there's another reason why I think that Nintendo stock could be suffering here. So the other reason is because of everything that's going on with North Korea. So in case you didn't know, North Korea successfully launched an intercontinental ballistic missile, in other words, an ICBM. And that missile that's capable of reaching the continental United States. I was looking at the range. I think it like reaches to Alaska or something like that. But anyway, it's capable of reaching to the United States. So that alone affected a lot of the Asian market. It affected a lot of Asian stocks. So that's another reason why Nintendo could have dropped. So there's kind of two reasons in my opinion. It's that investors cashing in profits, and then it's the whole North Korea crisis stuff that's going on, and that's kind of causing a lot of panic as well. So for those kind of reasons. So anyway, the point is, for me, I'm still very long on Nintendo stock, and I still think that it will continue to do very well going into the end of this year. We're going to have holiday season. I think it's going to do very well in holiday season. I think Sony and Microsoft kind of disappointed during E3, not too much, but a little bit, and so we might see sales pick up for Nintendo during holiday season, and then going into next year, we'll get Pokemon on Switch maybe late next year, and that will really drive up the stock. So anyway, that was Nintendo. Okay, next up, I want to talk about Activision Blizzard. So looking at Activision stock, they're up 1.6% today, and then in extended hours trading, they basically flatline. So I want to talk about Activision because they're obviously up today. Well, there's some good news going on, and Activision is my favorite gaming stock. It's my number 4 stock right now. It's been very close to taking a spot in my top 3, but Disney usually beats it out. But anyway, what's going on with Activision? Well, reports are coming out that one of their newest games is a hit and selling very well. So we're talking about Crash Bandicoot, and this is the remake called Crash Bandicoot Insane Trilogy. So it's the first 3 Crash games, and they are remade as a PS4 or PlayStation 4 exclusive. Now, reports are saying that it snagged the top spot in the weekly UK sales charts and posted the best single format debut of 2017, beating out not just Horizon Zero Dawn, but also Zelda Breath of the Wild and Mario Kart 8 Deluxe. So that's fantastic news. It also snagged the second best overall debut in 2017, falling behind Ubisoft's Ghost Recon Wildlands. So this is fantastic news since the game most likely didn't really cost Activision very much to produce it, and while it may not cost as much as other games in terms of sales price, it can still really help Activision's fiscal year and may even help them beat some expectations as well. So I think it's really good. And then not just that, but Activision also still has Call of Duty World War II coming out, and then they also have Destiny 2. So there's a lot of really good things going on for Activision with mobile gaming and esports and all that. So there's a lot of reasons to be bullish on Activision. But anyway, I also just want to make it clear though, these charts were from the UK, so that's not that doesn't represent the entire world, but it's still really good news. And usually UK sales are somewhat similar to American sales, so it's still really good news in general. Okay, next up, let's talk about O'Reilly. So let's take a look at O'Reilly's stock. They are down 18.89% for the day, up 0.52% in extended hours trading, but still down massively, over 18% down. And some of the reasons why. Okay, so there's a couple things going on here. Well, first of all, auto part retailers are down in general, and there's a couple of reasons why. But O'Reilly announced some second quarter numbers, and they weren't that good. And then on top of that, Volvo made some negative announcements, and that kind of triggered a whole auto parts sell-off and stuff like that too. So let's talk about that for a second. So O'Reilly, they reported that second quarter same-store sales year over year rose 1.7%, which is good news, right? Well, not so much, because that's actually lower than their guidance of 3 to 5% growth. So that hurt them and kind of triggered a sell-off. But in addition to that, Volvo said that within 2 years, all of its autos will be either electric or hybrid, and they'll leave behind the combustion engine technology. Now, this is horrible news for auto part retailers such as O'Reilly, because the new engines have around 20 moving parts, whereas compared to the old combustion technology engines, those have over 2,000 moving parts. So you're talking much less parts, and you're also talking a lot less maintenance. So that's horrible news for a lot of these type of stocks. And so we'll kind of have to keep an eye on them, but I definitely wouldn't touch them. If any of you guys are invested in them, please let me know and give me the reasons why, but I'm definitely staying away for right now at least. So anyway, some other stocks that I just want to finish off here with. So a couple stocks here. Vantic saw a nice dip today after announcing a deal to acquire rival payments processor WorldPay Group, which is actually down even more because JP Morgan Chase said that it will not be making a formal bid for WorldPay, and it was kind of rumored that they would and stuff, but they said that they're not going to. And now JP Morgan stock actually went up today. And finally, Tesla is down today. We talked about that in the beginning of the video. It looks like they're mostly down, maybe for a couple of reasons, but mostly because of the Goldman Sachs. They lowered their price target from 190 to 180. I believe that's a 6-month price target, and I believe that they reiterated a sell rating. I'm not sure, but I think that they reiterated a sell rating. And then I think the other part of it too, we talked about it in the previous video, how Elon Musk was tweeting out about production and stuff like that for the Model 3. I think a lot of investors were happy about that, but at the same time, I think some were disappointed because they wanted them to ramp up production a lot sooner, and they wanted to see some higher numbers as of right now. And it looks like those higher numbers are going to be reached more towards the end of the year as far as production goes. So anyway, I think that might have played a little bit of a role as well. So anyway, that is all I've got for today, and I hope that you guys enjoyed the video. Thank you so much for watching. If you are new, please subscribe. If you like the video, please hit the like button. It helps me out a lot. And if you watch the video all the way through to this very moment in time, then you are I'm gonna say you're Activision Blizzard, because you're almost in my top 3. I don't know, this isn't going well. You're in my top 3. You guys you guys are more like Nintendo, but Nintendo isn't doing well, so I can't call you Nintendo because Nintendo isn't doing well. So you're more like Activision. You're doing very well, and you belong in my top 3. And I'm sorry that you're not in my top 3. I'm gonna get you there though. So anyway, all right, thank you guys for watching, and I hope that you all have a wonderful, beautiful day. Take care.